fundamental fears that we are going to get a higher PCE and therefore a stronger dollar. We did shed light on what we would do if we have a weak PCE and what we would do if we had a strong PCE. So if you have a strong PCE, you expect the market to go as low as 2,240. Of course, if we have already longs, we would want to simply dump them or close them out, right? Or if they're hedged, we'll just hold the hedge until the market and use the hedge all the way down to 2,240 before there is a reversal. At this point, you're seeing a wedge, and you will get to do a longer term softening double head formation before the market attacks again the market high. If we have a weak PCE tomorrow, or if the PCE is already absorbed by the market, over here we're showing that we can go as low as 2,280, but if we have a weak PCE, I believe we bounce from current levels, 2,329, at the most 2,310, on top of that level 1, higher degree level 1, and move higher. And at that point, you're just seeing probably head and shoulders, not even a double head. You're just seeing head and shoulders, and the market's moving higher. And this bounce is the most probable because we believe that overall, this is on the 45 minutes. This is the current market construction going on. It's attempting to do something like a double inverted head before the market moves higher. It is bouncing very close to the proximity of a level 1. Or an internal level 1. There's an internal level 1 here. So if there were fears that tomorrow we'll see something very strong in terms of a higher PCE and higher inflation, the market would have actually moved even right now before the release to the downside. The fact that we are holding ground above 3,000, above the market bottom, 3,226, means that the market is just discounting the same numbers, just wants to make sure that we are not going, or the market is not going to overvalue gold before tomorrow's fundamental release. And therefore, we believe if we have the long, we protect them by a hedge. We'll be looking at this. If we don't have the longs, we can use a buy stop above the current market high, assuming it's a very weak number and the market takes off quickly, we're in the money. Or we can go long after the release. This is what we're looking at right now. This was at 2,346. Now, of course, we are 2,300 and I believe 34, around that level. Still the same structure, and it could become simply 5-wave swing, and you're just seeing a corrective A, B, and a C before the market moves higher. We remind everyone of the trade swing that we're going to be trading. We are looking at a correction. If we get a correction on the 4 hours or on the hourly time frames, buying 2,310, 2,280, 2,240 are excellent entries. Of course, we only go on a confirmation, meaning you want to wait until the market will bounce one of these levels. You get positive momentum on the 5 and 15 minutes, buy, right, and probably have the stop or hedge below this, beneath the level below it. Entries at such levels will take us to 2,480 initially on the daily chart. Or we simply buy a trigger on the 45 minutes. Our projection is to buy a trigger. We expected we had a trigger yesterday, but it was a failed trigger. If we're still holding it, it's all right, perfectly all right. We can hedge it below the market low. So I believe we did the trigger out to 2,360. Current market is 2,335. This market low is around 2,326. We can have a hedge at 2,320. If the market falls below this, we are protecting our long. Let the market drift lower. If there is reversal, we'll probably have a loss on the hedge, on the sell side, because the market could reverse quickly. Nevertheless, we'll just close it out. It becomes transaction cost, and we hold the long. We hold the long to attack all market highs. If you see lower levels, it means 4B here is doing an AB and a C, higher leg A, higher leg B, and we're still doing a C to 2,280. These levels that we're looking at on our swing projection. If you're not in the long or the shorts or not engaged in the market, it's best to wait until tomorrow's release. At this point, we're seeing good negative momentum on all time frames, 15 minutes. Let's check the intermediate term. Not really very strong negative. And no trigger set on the 45 or on the day. We believe we could, of course, segregate it. At best, we do that tomorrow because of time. We have a 1 and a 2, we have 3, 4, and a 5. We get an A, we get a B, we get a C. This will take time, even after tomorrow's release, especially if we get what is expected, especially if we get the same numbers that we have been looking at. 3.7, 3.5, and all this kind of numbers. So it's probably a 1 and a 2, 3, 4, and a 5, or it's probably an A and a B, and a 5 swing C. Becomes high degree A, high degree B, high degree C. We get double heads before the market gradually takes out the 200-point moving average above and moves higher. Right, let's move to oil. This is going to be our last trading issue for the day. So if you have any questions or issues that you wish reviewed or revised, please notify the moderator so we could attend to them before we call it an end to our analysis today.